my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A dramatic move yesterday, a combined key reversal down, a bearish engulfing pattern, and a bearish open and close black Mariposa as well. The market had gapped initially higher, then was since filled, seemingly trying to fill in the changeover gap made last week. However, as soon as the market touched the slowly declining short moving average overhead, currently at 70.83, then prices just dropped all the way down to the support of the still rising short medium moving average, currently at 70.11, where they closed. I think the short moving average may have been the final straw, because if you remember, I had pointed out these past days that we have some recently acquired congestion in the 70-80 area as well. Now so far today, a slightly higher open and a move up, but then stalling around the upper trend line, currently at 70.34 of the February to date broken upper rising wedge pattern. To be honest, I suspect this rising wedge, upper wedge trend line may not be that important right now, as it has failed to show itself during last week when prices were all over here. German DAX futures. A bearish engulfing pattern yesterday, as the cap on the market, which we saw all of last week, continued its work. It wasn't the hardest of actions to take. After all, last Friday was an indecisive doji cross. However, the depth of the move lower was a bit disappointing, given the impression that it should have been more, but wasn't. The market continues to find itself pushed up by the gently rising short medium moving average, currently at 15.428, but capped by that same 50% projected Fibonacci line overhead at 15.629, and its recent partner, the flatlining short moving average, currently 15.635. Beyond the nearby overhead resistances, we have the recent broken lower bull channel line, now moving away from the others, currently at 15.708. Meanwhile, further below, we have the newly reassigned October 2020 to date uptrend moving higher, that's currently at 15.395. Like I've said all last week and now this week, it is all getting a bit precious now. Now so far today, strong reactionary move back up through the cap of the 50% projected Fibonacci line and its partner, the short moving average, and now not only threatening the old broken lower bull channel line, but also that they may be an immediate countering key reversal up. That's adding more intraday indecision to what's going on in the market. So if price is close tonight over 15.595, then we'd have that key reversal up. At the moment, it looks like we may. USE Mini S&P futures. Okay, this is all getting very precious right here right now. Yesterday gave us a new high open and high close, but that was so small that it could have looked like an indecisive spinning top, which is not what you usually expect right at the top of the market. Anyway, I'd now like to explore an idea I put forward yesterday, the action since mid-May being a possible rising wedge pattern. Why should I do that? Well, because I think it is relevant and we may be coming to a breakout, false one or real. I'm not sure yet. So, all this action is in the shadow of last week's immediate countering weekly key reversal up, a subject on which I have already espoused my thoughts. Anyway, we have a recently drawn upper rising wedge trend line, currently at 42.80. This pattern has become evident over the last few days and is close to completion, as depending on your count, we have a 4th or 5th touching of the trend lines. For your information, we actually need at least 5 touches combined of both trend lines to have a true count. Now, 2 things I need to discuss specifically, both important. Firstly, beware of false breaks. They are common in such patterns, so just be careful. Secondly, I cannot say as yet which trend line will break, though I can see we're testing the upper rising trend line right now. However, I can give an idea of the size of the move higher off or under the appropriate trend line when it breaks. For a break higher, it'll be a move of about 132 points. For a move lower, it will be a move of about 67 points. Just keep these in mind. Now, so far today, an attempt higher, but capped again by the same upper rising wedge trend line. Further overhead, we have the new 50% projected Fibonacci line of 43.43. French CAC 40 futures. Second bearish black crow yesterday, following on from Friday's high for that week. More importantly, this was a big move down and away from the overhead lower time, currently at 66.51 of the recent late February to late March broken bullish shift pitchfork. Prices dropped and closed below the rising short moving average support, currently at 65.86. This is the second time within 4 days. Below we have some lesser Fibonacci levels at 65.28 and 64.94, but the next support in size is the old projected 50% projected Fibonacci level at 64.81. Now, so far today, a slightly higher open and a move higher, but only as high as the short moving average. The action, nevertheless, is looking like a small bullish harami right now. Thank you for listening. This short virtual broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.